Okay, in this video, I wanted to show how I use the 5-minute chart early in the session to help with my trading. If you look at my prior videos that I've posted, I go over my entire game plan and my philosophy and what I'm looking to do in terms of catching the first directional move of the day early. So, for example, this is a stock. This is NEO, and this is the daily chart. Just to summarize those other videos, I'm looking to generally buy a stock when it's above the midpoint of the prior day, and we get a 15-minute price opening that either starts up green and continues, or we get a red to green move early, or sometimes we get a 15-minute bar that starts up and then pauses and then breaks out. Either way, I'm trying to catch that first directional move of the day. And you can look at the other videos to kind of see how that, my whole philosophy on why I'm looking to do that. So now what I wanted to do is kind of show you even a further fine tuning of that, where I will often look at the first 5-minute, or the 5-minute chart early on to help me with the first 15-minute bar, which is that first 15-minute bar. If you watch the videos, is critical. The whole reference point to it. How I, again, set up my trading plan. So what I'm doing here, this is last week's trading, for example. The one day where you had a lot of stocks that presented buy opportunities was on Tuesday. On Monday, you can see here the 10th, a lot of stocks reversed on the day, and then they set up what looked like strong buys on Tuesday. And I'll show you a few examples of the ones that started above the midpoint. Like here's Tuesday, the 11th. It started above the midpoint higher. You can see here it had a bit of a green day. So we'll kind of go now to on these examples. I'll just look at this, chart here, focusing on Tuesday, January 11th, where we can look at the 15-minute chart here. This is, all 26 bars of that day. And then this is the 5-minute chart on the bottom. So these first 3 bars, for example, represent the first, one 15-minute bar. This is the 5-minute chart. And so it's starting out here. I just wanted to show you the first way I might look to play the 5-minute chart. Every so often, when I'm anticipating a buy, because let's say NEO is on my watch list and I'm watching early price action, if I see a very strong 5-minute green bar, and it really has to be strong, or in this case, it could be a big hammer bar, I might buy the opening breakout of the 5-minute chart here and set an immediate stop at the midway point of that bar. Obviously, what I'm trying to do there is anticipate that the first 15-minute bar will turn green. So I have 10 minutes to go when I do that, and I have to watch it closely. And then once that turns green, I have a pretty good understanding, a pretty good feel that we're going to at least get some follow through. And at that point, I'm in at bar number 1 instead of getting in kind of here, on bar number, let's say 4, or above the breakout of this 15-minute bar. And I have a bit of a cushion, because my philosophy also, and I've talked about this on prior videos, is generally when I'm looking to buy early on, I set my stop the midway point of that first 15-minute bar, and I give it a little bit of leeway relative to that. But I'll show you some examples where a lot of times I am not letting price come all the way down to stop me out there should it not follow through, and I use the 5-minute chart to help me with that. So this video is all about how you could have a nice simple rule that I've discussed on prior videos. All right, midpoint to the prior bar, that's my stop. And if I get stopped out, it's a small loss. And then, I don't get the move I'm expecting. But a lot of times I'm getting out way before that, given the way I look at price action. I'll show you some examples of that on some other stocks here. But this is one example where I could buy early. Another example, which this could be a good example of that too. Let's say I didn't buy that breakout, but then I see the second bar heading up, and then I see the third bar kind of holding up here in this territory. At that point, with only like 4 or 5 minutes to go in the 15-minute bar, I'm kind of anticipating it's going to be a green bar. And when it's a green bar, I also then anticipate we're at least going to get some kind of breakout attempt. Doesn't always happen, but what I'm trying to say is I sometimes will buy here with like 3 minutes to go if I really see the green bars holding up, and then I can get in a little early from this, breakout right here. It's just a subtle thing. Again, it's all relative to how I'm kind of viewing the stock in general and the fact that I'm getting that strong opening. So, if you just want to buy the 15-minute breakout, that's fine too. But a lot of times I'm seeing these first 5-minute bars forming and making a little more aggressive decisions there. And again, the main thing is if I get stopped out and then let's say we form a few inside bars here or on the 15-minute chart, I could rebuy it later on. So keep that in mind. But that's one example of the early breakout. That doesn't happen too often, by the way. A lot of times I'm more watching what's developing. It's a little too early. I know I have 10 minutes to go, so I want to watch some other things. The best trades, quite frankly, is when the first two bars kind of pause in here, the first five, and then with only 5 minutes to go, I buy that breakout anticipating this. And let's see if I can find some. There might not be perfect examples of that, but I'll just show you a whole bunch of different scenarios. So here, NVIDIA, had a reversal type day on Monday, green day, or Tuesday went up. Now, this was an example because I actually remember trading this where it was a choppy day. There was a choppy opening before we got the green price action, and I'll show you how that kind of unfolded. But on the 5-minute chart, it immediately went down, so there was nothing to do here. Then it kind of inside, then it went down. So the first 15-minute bar was red right out of the gates. What you had here was the inside 15-minute next, and then I would have bought this, breakout here. Now, if I look at the way the 5-minute chart was forming, that's just a little inside bar here, and then it broke up. Now, here's the interesting thing with this particular trade. So when I buy this inside bar, I want to see that first 15-minute bar break out and go. I mean, that's the whole point of buying the inside bar. I don't want to see it failing up here. And anytime I see any kind of failure on that first 15-minute bar breakout, it could be from an inside bar, it could be from the 15-minute bar go that's just kind of not going after like 5-10 minutes. I'm looking at that 5-minute chart for a possible reversal here. And here you can see we kind of had a 2 up and we held and then a 2 down. I would have got out of this early. In this case, it kind of aligned with just the 15-minute chart pausing and heading lower. So this would have been a break-even trade. A lot of times, as long as we hold inside that first bar, I'm looking for maybe a re-entry if I still like the stock, if I haven't replaced it with other stocks, which I go into on some other videos when things aren't moving. Sometimes I look for better stocks, and maybe I wouldn't have even been looking at this again if I was even in it. But if I was, then this little inside bar here was a buy, and it eventually moved up, and then it did break through this first 15 minutes. It didn't pause again up here in reverse. It followed through. So now I'm in a no risk trade from up here, probably taking profits, all kinds of, things about, how I take gains and how I scale out and everything else. But that's just an example here on the 5-minute chart early. It went down and you had to then focus on the 15-minute chart here after you saw that early 5-minute price action. Other stocks, let's just go through a few examples, just different things. I'm flipping through the list here. Lucid, let's see what that one was, because that I traded the week before. That had the reversal more on Thursday of last week, and then by Monday it was kind of a continuation green day, kind of pausing, and then you're getting the midpoint higher for sort of a continuation buy. But let's see on the 5-minute chart what it is. Okay, here's an example. It's not one I think I would have bought, but let's just assume for the sake of an example here that this was a 5-minute big green bar and I decided to buy that first breakout, and you could see it immediately failed. I would have immediately exit, and I've done this from time to time, when I try to be aggressive, and then I'm watching it closely and I see all this pausing action here, which equates to the first 15-minute bar plus the first 5-minute bar, the next one, just kind of give me a 4-bar pour. So that's really a great 15-minute, breakout buy on bar number 2 here. And it went up to give me all kinds of, so this would have been maybe if I was real aggressive, I would have stopped out with a very, very small loss, got back in and then made it all back with this kind of a move. And again, how I take profits and scale out. A lot of times what I do is I see that first move breaking out above the first 15-minute bar. I'm scaling out. That sets my break-even point to the midpoint of that first bar in case, something drastic happens and it collapses immediately and I can't get out. But a lot of times, even on, when I get these moves, even if I'll sense some other kind of pausing action here and I won't let it get to that, initial stop right away. I mean, that's just like a disaster stop to me. And then as soon as I'm not seeing it either breaking through the first bar or I see it pausing here after an hour, I'm just getting out of these trades, way before my initial stop. And quite frankly, most of the time I'm just taking profits and I'm missing even more of the move. That's kind of my whole, the way I trade as well. But that's a whole nother topic. I'm just trying to go over let's see the 5-minute chart here. Let's see what other stocks haven't I looked at. Goldman Sachs. Let's see what that one did. That's not even a good example. Monday didn't really do anything to follow through, so I'm not interested in that. Expedia. Let's see if that had a reversal looking day. Yeah, I mean that guess you can call it a reversal day. And here's a stock that obviously started above the midpoint of the prior day, but didn't do anything on Tuesday. Let me see what the action looked like. 5-minute chart immediately opened up in conflict. We went down, blah, blah, blah. First 15-minute chart didn't even go. Is that an inside bar? My eyes are bad. Yeah, that's even a 2 down. So that's not even a breakout. So this whole stock didn't even break out above the 15-minute bar to begin with. It didn't give you an inside bar on bar 2. And then it just kind of, we're just holding in here before eventually you got a little move higher. But this would have been one. I didn't do anything early on the open. Let me just try to get one more decent example of something here. Datadog, let's see, DoorDash and Datadog, those stocks. Yeah, this was a good reversal. So this is what is this one? Dash, had the good reversal on Monday. Tuesday, we had a nice green day. Let's see what developed here. Okay, so this is interesting. This would have been one, maybe that first green bar wasn't big to buy the breakout, but the second one was pausing here. I still like it. The third one, it didn't really even break. It kind of, let's say it broke out early. I might have bought that with like 4 minutes to go in that bar, but either way, even if I bought the 15-minute breakout, this was a classic. The first 3 bars looked nice, and I would have bought that 15-minute breakout here, and then boom, boom, boom. You get that great opening move for profits on the day. This was a nice trade. So this was one of the ones that were worked out. On the 5-minute chart, given the fact that it was a little bit of a hesitation move, I would have watched it. I would have loved seeing this pause on bar 2 and been ready to buy, either maybe with 4 minutes to go in the bar, in the 15-minute bar, or I would have just bought the 15-minute breakout. Either way, this was a good trade. And let's look at, let's see the 2 in this area, DDA. Yeah, this one had a 15-minute reversal. You're expecting it to follow through higher on Tuesday. Let's see, first 5-minute bar, in this case, kind of had a hammer, but that's not really what I'm buying quickly. Typically, I want to see a strong, big 5-minute green bar where I just sense that everyone's looking to buy early, and that could start the move of the day. So anyway, probably would have watched that. First 15-minute bar kind of went up. And here's an example more of a trade that didn't follow. So let's say I would not have bought that. It went up, it paused. Then I've been watching pause, and I would have bought this breakout here into bar number, let's say 2 on the 15-minute chart. But what happened was, and then I set my stop at the midpoint of that first bar. That's kind of down here. But I could see this third bar is just not following through like I would have expected above bar 1. So I would have been definitely exiting this. It probably would have been a very small loss. I'm trying to look on the 5-minute chart would have alerted me that here's the breakout. Okay, pause. Then these 3 bars are doing nothing, so I would have exited even before that 15-minute bar low, somewhere probably in here, because again, I just, this whole thing is about risk management. So I'm showing you kind of an aggressive way to look at the 5-minute chart to get in, but I'm also want to point out that with my trading, I use this 5-minute chart in early price action and judging that first 15-minute bar as a way to really control risk as tightly as possible. I know what a good 15-minute chart should look like on the good trades. And if I don't see it, I want to get out. So that's why I'm not looking at strat signals on this 15-minute chart to guide my entries. A lot of times it gets choppy in here early before it heads up, so I don't want to be, you'll be chopped to death. Sometimes you get this kind of, I'm just looking at that first 15-minute bar as my reference point. You can go back and look at my other videos and see what that's all about. And if we're not breaking out above that, then I'm looking to get out quickly. It could be on the 5-minute chart. So again, I guess I'll end it here. This is just, and the main point of this video is not so much to understand everything right away, but it's to show you if you do if you've watched my other videos and you see the way I'm looking at early 15-minute price action, maybe, you want to start tracking the 5-minute chart there too and kind of seeing the relationship, because it often gives you a good opportunity to enter early. It gives you a good opportunity to control risk. And that's kind of the main point of this video, that I'm definitely looking at the 5-minute chart in conjunction with the first 15-minute chart. And that kind of goes hand in hand with the overall game plan that I've described on previous videos.